Hello students, welcome to my channel KT's Commerce Classes. Today, Accounting of Partnership Part 2, Admission of a Partner. We will discuss what is premium for goodwill. When a new partner admits in the business, he has to bring cash as capital and premium for goodwill. These are the two things a new partner should bring in cash. When a new partner brings capital, entry will be cash account debit to new partner capital account. Now we will separately discuss about the premium for goodwill. First we know what is premium for goodwill. Premium for goodwill, when a profit sharing ratio changes, the gain of any partner in his share in future profit of the firm becomes equal to the sacrifices made by another partner or partners of the firm. The amount of the gaining partner pays to compensate this sacrifice is called premium for goodwill. Now what is premium for goodwill? When profit sharing ratio changes, the gain of any partner in his share in future profits of the firm becomes equal to the sacrifices made by another partner or partners of the firm. The amount of the gaining partner pays to compensate this sacrifice is called premium for goodwill. Now treatment regarding premium for goodwill. Before that, when a goodwill exists in the books of the firm, what we discussed in previous chapter, goodwill should be written out. Among which partners? Among old partners in old ratio. Now, premium for goodwill, number one, if is paid privately, then no entry for premium for goodwill is recorded in the books of the account. Now, second entry for premium for goodwill received in cash from new partner and retained in business. When a new partner brings cash as premium for goodwill, entry will be cash or bank account debit to premium for goodwill account. Second entry will be premium for goodwill would be transferred to sacrificing partners. Entry will be premium for goodwill debit to sacrificing partners capital accounts or current accounts, in which ratio? Sacrificing ratio. Now number 3, premium for goodwill is received in cash from new partner and withdrawn by the old partner fully or partly. Entry for the premium for goodwill received in cash, same entry, bank account debit or cash account debit to premium for goodwill. Again, premium for goodwill will be transferred to sacrificing partners. In what ratio? Sacrificing ratio. So entry will be premium for goodwill debit to sacrificing partners capital account or current account. In which ratio it will be distributed? Sacrificing ratio. Now for withdrawal of premium money. Sacrificing partners capital account or current account debit to bank or cash. For the new partner, if unable to bring his premium for goodwill in cash. When a new partner unable to bring premium for goodwill in cash, entry will be new partner's capital or current account debit to sacrificing partner's capital account or current account. In which ratio it should be distributed? Sacrificing ratio. Next, accounting entry. For only a part of the premium for goodwill brought by the new partner in cash. Means, suppose a new partner brings some portion for the premium for goodwill and remaining portion unable to pay. Accounting entry will be bank account debit to premium for goodwill, the portion brought by the new partner. Premium amount transferred to sacrificing partner's capital account. Next general premium for goodwill account debit, new partner capital account or current account debit. The portion which unable to bring, that will be transferred to new partner's capital account or current account. to sacrificing partners capital account or current account. In which ratio it will be distributed? It will be distributed in sacrificing ratio. Next entry, for new partner is temporarily unable to bring his/her share of premium for goodwill in cash, but a loan account of the same amount is raised against his/her name. When temporarily unable to bring his premium for goodwill in cash, a loan account of the same amount is to be raised in his or her name. For loan raised, accounting entry will be loan to new partners capital account, loan to new partners account debit to premium for goodwill. Second entry, premium for goodwill account debit to old partners capital account. It will be distributed in what ratio? Sacrificing ratio. Note, a note to be remembered in mind: in case of fixed capital, instead of partners capital account, partners current account is to be maintained. Now, one problem has been given regarding treatment of goodwill. G and O are partners in a firm sharing profit in the ratio 3:2. On 1st January 2019, their capital accounts are 50,000 and 30,000 respectively. On that date, they admitted X as a new partner. So, new partner getting how much share? New partner getting 1/6 share in the future profits. The new partner, new profit sharing ratio of G, O and X will be 8:7:3. So, new profit sharing ratio given in the question how much? 8:7:3. X brought in rupees 20,000 as his capital and rupees 15,000 in his share of premium for goodwill. Record accounting entries. Old ratio of G and O. How much given in question? Old ratio of G and O? It is given 3:2. Now new ratio of G, O and X. How much given in question? It is given in question 8:7:3. Now we have to find out what? We have to find out sacrificing ratio. Sacrificing ratio equals to what? Old ratio minus new ratio. Calculation of sacrificing ratio. So sacrificing ratio equals to old ratio minus new ratio. Who sacrificed? G sacrifice. G sacrifices. Old ratio of G how much given? 3:2 means 3/5 minus new ratio how much given in question? 8/18 equals to LCM will be 90. So 5/18 या 90, 18/3 54 minus 18/5 या 90 means 40 equals to 14/90. So G sacrifices 14/90. O sacrifices old ratio given in question how much? Old ratio given in question 2/5 minus new ratio how much given? 7/18 equals to LCM will be again 90. So 5/18 means 36 minus 35 equals to 1/90. So sacrificing ratio of G and O equals to 14 by 90 is to 1 by 90 equals to 14 is to 1. Sacrificing ratio equals to how much? 14 is to 1. Now we have to find out the accounting entry. Now new partner brings what? Brings 20,000 as capital and 15,000 as his share of premium for goodwill. For journal entry, for introduction of capital and premium for goodwill, accounting entry will be bank account debit to X capital account to premium for goodwill. Amount will be how much? Bank will be 35,000. X capital how much? X capital is 20,000. Premium is how much? 15,000. Narration will be being amount brought in by X as his capital and share of premium for goodwill. Share of premium for goodwill. This is the narration. Now premium for goodwill will be transferred to which account? It will be transferred to old partners capital account. Will be distributed in what ratio? In a ratio that is calculated previously. Sacrificing ratio equals to 4:1. In this ratio it will be calculated. Same date. Premium for goodwill account debit. To G capital to O's capital. Now premium for goodwill is how much? Premium for goodwill is given 15,000. It will be distributed in what ratio? 14:1 means 14,000 and 1,000. Narration will be premium for goodwill transferred to old partners capital account in their sacrificing ratio (14:1).